Hello, friends. The Fed met yesterday. They did raise 25 basis points of the Fed funds rate. So what does that mean for us in the housing market? And what's that mean moving forward? I'll give you my 2 cents. All right, so check it out, team. Here's the good news. Rates 6.42. Again, that's FreddieMac.com. You can argue lower. We've had some lower. I can't say it for compliance reasons, but nonetheless, they're still trending in the right direction. It's obviously significantly better than the sevens from where it was a while back. Check this out. Remember, guys, green is good. Look what all the SVB, the Silicon Valley Bank, look what that did to us. It creates all that uncertainty. What happens when the market's uncertain? There's a flight to quality that includes the 10-year treasuries as well as mortgage-backed securities. Hence the reason why we've done really well. You can see the volatility in the market and these wild swings over the last couple, well, call it week and a half, 2 weeks, whatever it's been, but it's pretty wild. We've hit the 200-day moving average. That's this light blue line here on top that you can see rates are now up against. That may be a formidable opponent, but in markets like this where the world's just all crazy, the technicals do take a back seat. However, we are locking folks as we speak for anybody that's closing in the near future. All right, so yesterday Fed's meeting. Here's some of the highlights and what things I want to note. So I do appreciate Jerome Powell saying a few things in the statement afterwards, at least that alluded to the correct things we've been saying here on these videos for a while. But the reality is, for example, the biggest one, I don't say the biggest one, but inflation obviously is the biggest concern. As we've been saying, May 10th, start your calendars. We think that's when the inflation numbers will start coming down significantly, even more, because of the housing lag. So he actually did comment about that. But guess what, guys? He said it was 44% of the PCE. He was wrong. It's 44% of the CPI. I understand it's a slip of the tongue, but when you're the Fed president and chair, you need to, your chairman, you need to be able to say the right things. So, but nonetheless, I appreciate what he was saying. Everything for the most part, I'm not going to throw these numbers at you. If you want to see them, you can. But this is what we were saying as far as just, where things are happening with housing, because it is such a huge component of the CPI that they're measuring. You guys can look, these are down the blue lines, the light blue, I should say, single family attached. And then the darker blue is detached, right? What does that mean? Like condos versus, townhomes versus single families. Guys, check it out. The precipitous fall of how much rents are going up. It is no longer going up. You can see that it takes a while. Why does it take a while? Simple. If somebody signed a lease a year ago and it doesn't come due until May, it's not necessarily getting reported in all the current numbers. So I do appreciate that Jerome Powell finally mentioned that. That is a big piece why we think inflation is coming down. And like I said, this is what he said that isn't quite correct. He said it's 44% of the PCE. Again, it's not. This is the other part. The housing service sector still has not seen progress in inflation. I disagree. First of all, I don't think it makes up 56%. I'm 99% sure of that. But here's the four areas where inflation is still evident. Airline prices, I can attest to that. Pet services, like grooming your dog. Cable and live streaming. And I know that because my YouTube TV just went up, I think $6. And lastly, like motors, like insurance and car maintenance, things like that. Beyond that, those are the only areas that inflation's still running hot, which is a very, very small percentage of what the economy is doing. So I do think they're missing it. That, as somebody once said, they're kind of like driving, looking in the rearview mirror. They're data dependent. Well, the data is old. So I do think they're ahead of this. I understand they kind of maybe had to do it just because they said they would, the quarter increase. We'll see what they do in the June meeting. Right now on CNBC, they're just talking about whether they do or don't, to be determined. Existing home sales, guys, they were up almost 15% in February. Supposedly, they're, true, but not true. They're down year over year, 22%. But guess what? In January, it's down 37%. That just tells you the recent uptick we've obviously had. Median home prices are up. I think I saw somewhere where year over year, just the actual appreciation, you can see it down here in the bottom blue, FHFA. That means like Fannie Mae and Freddie Mac. That's the governing body. So for Fannie Mae and Freddie Mac, it's been an 8% increase year over year of actual of appreciation. For Case-Shiller in their study, it's 5.8. So point is, homes are still appreciating. We've been saying that, like people are waiting for homes to crash. It's just not happening. So while the median home prices have quote unquote come down like a small percentage, median isn't the average. It just tells you more lower price homes are being sold than higher price homes. So you guys can see this, we broke it out for you based on just the sales prices here. More of the lower end homes are being sold, and that's why the median number changes. It's not an average, it just means more on the lower end are being sold as opposed to the higher end. But things are still going up, appreciation is still happening. Inventory, we've been saying it for a long time. Guys, it is still really, really, really low. Less than 1 million homes are still for sale. And guess what? Of the new construction homes, they say, oh, we're starting all these new starts. That makes this big supply. When you figure the ones that are actually available to be bought and moved into, the supply is only 1.4 months. That's still crazy. The average market is supposed to be like a balanced market is supposed to be like 4.6 months. So while they're saying, oh, all these new homes have been started in February and it's an 8.2 month supply when it gets done. Builders, as you guys know, you're not doing a lot of specs right now. These are, dirt that people are buying the dirt. So while you can say it's inventory, the reality is it's true, but it's not even ready and done yet. So it's still good market, as we know, especially here in Dallas Fort Worth. If you're watching it here, this is all kind of saying the same thing. So that's really it. I'm trying to keep it short and sweet for you guys. Yes, the Fed raised rates. As you can see, our mortgage rates have done better. And if you guys would just share this, follow us on these social platforms. Let's get social. As always, we appreciate you watching. Hope you guys have a great weekend. And Longhorns play tomorrow night in March Madness. So hook 'em. Bye.